This is about credit and how important credit is to the world.
I found myself fascinated today listening to David Faber interview some of these greatest minds and creditors at that Barefoot Economic Summit. What's so fascinating about credit? Simple. It's more important than stocks. Hey, it matters more in the whole market, not just here but in Europe as well. Yet credit is the single most important issue out there right now, just like it was the most important thing in 2008. Yet most people who invest in equities have no idea of credit's significance or how it impacts or rules the world. I sure didn't know when I started working at Goldman Sachs almost 30 years ago. Came in with my stock guns blazing. I quickly realized I was facing the tank of bonds with a pea shooter. In fact, in the first Marathon Friday night session mandatory classes that went well toward midnight after a long, hard day of learning at the desk of others, I got it drilled into my head that the bond market's 10 times bigger than the stock market. That was back in the 80s. Probably 100 times bigger now, given all that sovereign debt worldwide, not to mention all the debt the U.S. Treasury alone has issued since those classes convened. But it's not just an issue of size. Unless your company is an all-cash business, which almost none are, maybe like a push cart, you need credit. Unless your country spends dramatically less than what it takes in from taxes, you need credit. You cut off credit, a whole nation can fail. You've heard of banks that are too big to fail? Now we got countries that are way too big to fail, and are on the verge of failing anyway. They are too big to fail because if they go down, so will almost every debt holder of any size. And that's not the real point here, though. The point is that most people who follow the stock market don't realize that the bond market's the boss here. The debt holders are in charge, whether it be with Eastman Kodak, where the company thinks it's in charge, believe me, they aren't. Whether it be SocGen or Paribas, any of those French banks that are always telling you how great they're doing, or with Greece itself, which is always telling you how great it's doing. The bond boys are so powerful that they can hold up governments that might want to do the right thing. The debt holders in real estate, the banks, they won't allow borrowers to refinance at the low rates Ben Bernanke's given us, right? They're not helping. The debt holders, they say they're helping. The debt holders in Europe won't take the losses that their governments are so hopeful that they will take. You know how powerful they are? Alright, here it is. Remember that scene in Godfather Part 2? When Cramer fave Hyman Roth says to Michael, "We're bigger than U.S. Steel." A tacit acknowledgement of the behind-the-scenes power of the mob. Well, the mob's got nothing on the bondholders. Once you realize that, you can start understanding why we keep going down on credit news, even if the corporate earnings news is terrific. So when you're confused about the power of credit, just remember that Roth, poorly owned power play. Then you'll be able to put equities in the right place in the pecking order. It's exactly where they belong. Never Cramer.